Hello, you're watching TVP World, and this is World Talks. My name is Sascha Fahrbach. Poland's central bank is developing a national alternative to the European Union's safe loan mechanism, potentially drawing on the country's substantial gold reserves. Through details, though, remain under wraps. Now, Prime Minister Donald Tusk on Thursday stressed the urgency of finalizing the measure before the May deadline, noting that many Polish companies are relying on the funds. He also questioned whether the national bank has sufficient gold to support an independent proposal. Now, National Bank Governor Adam Glapiński responded that any plan would protect Poland's foreign exchange reserves. And now to discuss the latest, we're joined by Paweł Wojciechowski, former Polish finance minister, here in the studio. Thanks for coming by.
Nice to be here. Thank you.
So, first of all, SAFE, that is very much a big pot of money. It's loans from the EU. It's greenlit by Brussels. This is going to really benefit Poland in many ways defensively. Let's talk about the argument from the opposition, saying very much that this SAFE program would have a very large fiscal burden. Is there any truth to that?
Yes. Likewise, all the purchases that were made in the last 5 years that have created even bigger fiscal burden. So purchasing armaments in the USA and Korea and so on are bigger than the debt that would be incurred by SAFE instrument, which is around 44 billion euro, 185 billion zloty. That burden, of course, has good terms because there's no payments of interest for the first 10 years. It's a long-term instrument, 45 years. So the fiscal pressure would be in the later years, until 2070. And this instrument is cheaper. In the sense, it's about 1% lower than what we can get from sovereign debt, and therefore the economy is big in terms of savings. Is around between 30 to 60 billion zloty as net present value of. So you can save actually using the high rating of the EU and getting the money here, and therefore we can actually also benefit the Polish economy because over 80% of purchases are made in the Polish defense sector. So it's a very good program from the point of view of fiscal multipliers, from the point of view of sovereignty, because decisions are made in Poland. And also, I have to say that this deal is stabilizes, the real framework to provide security. And security has a price always because we talk about the fact that of course we have debt that will be for the next generation, but also we want to assure the security for the next generation.
And also, I'm curious, you have that knowledge, you're an economist by trade, a finance minister in the past.
Yes.
If we look at the numbers, let's just look at the numbers. You already said the benefits are there. If you're comparing things from the past government, from, let's say, Law and Justice, we kind of hinted at it, the purchases that were made, South Korean armaments, others maybe from the Americans. On the face of it, are these loans from the European Union potentially, are they better or worse in terms of what Poland could get and if we did it another way?
Well, in comparison to what we get on the markets, you have sovereign debt through issue of treasury bonds on the market by an instrument which is a short-term instrument provided by the Polish promotional bank called BGK. That money is more expensive from if you gather ourselves. So we use kind of, indirectly the high rating of the European Union and get the money. Of course, there's some little, percentage points higher because of the distribution, but of course this money is more cheaper. So the cost of financing is lower, and we get definitely, premium in terms of savings. If we use the European money through the loan that we get to the government.
Now, the idea, I think, roughly it's about safe loan interest, about 3%. Now, the opposition, President Nawrocki, has said that he has a better plan. So the idea here is, let's just recap as well, meeting also with the bank governor, looking at a proposed alternative that could finance defense at 0% interest. Is that economically feasible? How do they get to that?
Well, a lot of things you can say it's here zero, but it's question is where the costs are hidden, because this is the key question. You know, in the proposal, if you draw the loan from the European Union, safe as the government wants, that's all clear. Where the costs are, what you can calculate that, it's a burden. You know how it works. With that idea, first of all, we don't know all the details, but definitely the costs will never disappear. Okay, they're either in the National Bank of Poland balance sheet, or maybe they would be there because we sell the assets like reserves, like gold, and then we don't have reserves, so we have a lower insurance, large instability, and then, of course, through the dividend from National Bank of Poland, we can get the money, the government can get the money, but not now, not now this year, but in next year, because the 2026 balance sheet will be reviewed next year, and therefore the payment, if that gold is sold, could be transferred to the budget next year, in the middle of next year. So we're not talking about not about only the money, but also the issues of the kind of credibility of financial system, including the monetary policy and fiscal policy nexus. If we look at from that point of view, that creates, first of all, the hidden costs that would have to come up somewhere, either through, as I said, for example, in National Bank of Poland, if there is too much of supply of money, then it has to be sterilized. Therefore, sterilization would be costly, of the same amount as sovereign debt. So in fact, if you do that through the balance sheet, then you have the same cost as you would draw the money to sovereign debt. And therefore, they're comparable. So the debt from the EU is cheaper. If you do it through reserves, by selling reserves, you don't have reserves. You know, so you want to drive for vacation tomorrow, you sell the car, and you have to buy another car.
But on that,
so that's a risk, okay?
Yeah, the risk, and that's another note. I mean, it's 550 tons of gold. As you said, tapping into this. I mean, is this something practical? Is this something that's happened before? Let's say, how realistic is such a purchase, and can the bank do this? Could Nawrocki do this? I think legally also.
Yes, it can do it if you sell the gold. I've heard there's not a solution. That's kind of people saying from advisors from the president saying this is not in the toolbox, selling all the assets. But anyway, if you sell the assets, then of course you have a gain, real gain, and you pass it through dividend. And I said next year, 2027. So that's not an option. We need to buy the arms now. You know, it's on the table. You know, President has 2 weeks to sign the deal, which is not a deal for safe, but actually the deal to have a cheaper financing, because we would administer this instrument to the Polish Promotional Bank. So it's not about whether the safe will be signed, because the government will sign the safe instrument, but will we get cheaper money? And we'll be able to get also all the benefits from using this money for the Polish defense industry. You have a very low multiplier, so fiscal multipliers. We spend money, if you spend monies for imported goods, arms, then the benefits don't come to the Polish economy. So the whole idea is to bring this money, this basket of money, to the Polish economy, invest in the Polish defense sector, and therefore get all the economic benefits, so-called fiscal multipliers.
Yeah, and I think also you mentioned an interesting point about timing. There's a timing constraint for May, for SAFE as well. So the veto, President Nawrocki has a little bit of time left. How much is that weighing on this, and how fast can they come up with an alternative?
Well, it's impossible to come out fast with an alternative. So the only thing you can think about an additional type of ideas through financial engineering, but it does not justify the veto. Veto shows that either he's led into some kind of illusion financial illusion about financial engineering. The money is somewhere there in the National Bank of Poland, reserves and stuff like that. But again, the National Bank of Poland, the people are saying, will not sell the reserves. So where the money is. Of course, can do the tricks in terms of financing. Sell the gold, then repurchase the next day. But again, this is creative accounting. It's not possible based on the some rules which are based on the European Central Bank. So all the creative accounting also undermine credibility of the Polish monetary policy and fiscal policy. So altogether, I mean, this is not about the money somewhere there sitting for years and then suddenly we'll use it. I mean, there's nothing like that. There's no holy grail for that. The only thing is about how I think to look for justification not to sign the deal, because of course there is a political part of it that he's pressured the president to not to sign the deal. There is other discussion, political discussion. Why is it happening? And why is it this strong stance against it? Because it's a very big success for Poland to have this safe instrument. So why would want to not do that? So they're looking for other type of justifications to veto, and that's devastating to the authority for the president. I think. I think the president would still have to rethink about that. Will have a time to think, analyze it. If he finds a solution, that would have to be public before he makes the move on the veto, rather than saying there are some ideas, we'll not tell you about it, but of course the money is there, we lose the reserve. It has to be very clear. Poland is at the stage where the money is needed for this armament. The documents prepared for safe instrument. Polish industry is waiting for that money because it needs to stabilize in the long term its own investments. Right. And the time is by May. If we don't finish by May, then maybe we'll have two parties to the new contracts, because after that time, we'll have no exclusivity for just for the Polish defense industry, but we'll use the money for cooperative agreements.
So it's complex, and it's very much under time constraint. So this is also going to play into all this. Look, thanks for breaking that down for us. Really appreciate it. That was our guest in the studio, Paweł Wojciechowski, former Polish finance minister. Thank you so much.
Thank you very much.
And thank you for watching World Talks. We'll stay right here on TVP World for more news. Goodbye.